Good afternoon, everybody. Today is Sunday, April the 6th, and I'm putting out a special market video aside from the stock market morning prep video, which I will be doing as well on Monday. But I did a lot of analysis over the weekend based on Friday's price action, and I decided I needed to dial in deeper and see where and maybe possibly anticipate where this market may be headed, because I think after doing my analysis, I think the markets are vulnerable here, and I do think that the price action is telling us that the markets may be topping. And my job is to make sure that we educate and also put the trader, investor on the right side of the trade, and at least to protect your portfolio. And that's what I'm doing today. I wanted to get this video out on a Sunday so you can listen to it, maybe replay it at certain areas where you might think is more of important to you based on your portfolio. So I wanted to really get involved and kind of dial in just about the markets. No indicators, trying to feel for where we are at this particular point in time in April. So I want to get into it right off the bat. You can see here's a chart. And what it basically tells you is this red line here is market cycles, okay? And this green line here is the economic cycle, okay? And I look at this chart, and this tells me we're right here. And this tells me that we here is telling us that it is right now indicating that we're at a market top. Well, why? Well, before we go into any type of charts, we've noticed that energy has been actually rallying the last several weeks. We also noticed basic materials have been rallying the last several weeks. We also noticed that staples have been actually doing quite well, better than average. Healthcare is actually taking it on the chin, and you can see where we are with this area here. The first, pretty much, healthcare has doubled and tripled in the last year, so healthcare would probably be one of the first to go. And although healthcare is one of the safe haven sectors, as well as utilities as well. But if you could see in this area here, if you really just kind of sit where we are and look down here in this market cycle, it's telling us that we are at some sort of a market top. Now, this is just a model. Now, remember, whatever I say here is not etched in stone. All it is just what I've taken from my analysis. So, you always have to be prepared for anything. I mean, basically, as you know, news trumps the charts. We also have Federal Reserve pumping in liquidity into the marketplace. We have worldwide central banks defending their currency. So you really need to understand that this is just a guide, but it's also something to prepare yourself. So when you do get the signal, when you do see, hey, we are making lower lows, we are having more distribution days than we are accumulation, that's telling me that, hey, the market has topped, at least put in a local top, and then we are ready to reverse our trend to down. And that means we are looking to sell rallies instead of accumulating stocks. Now, if you are, depending on the type of investor you are, if you are a longer-term investor, you're going to wait a little bit to start buying or adding into your portfolio, because we could be in for anywhere from 3 to 8 weeks of weakness going into May, and usually April kind of ends the seasonal strength going in from the winter months into the spring, and that could be that really starts to subside somewhere around the middle of April, but we're seeing some signs, early signs, that the market may be topping. So, you need to know what type of a trader you are, what type of individual you are as a swing trader, day trader, and obviously if you're a day trader, you still want to know what's happening around you outside of just looking focused on intraday trends. It's always good to know what the longer term picture is, and this is what this video is about. It's more of a longer term approach to the markets, okay? And we want to be ready for this, because this is it's going to present a lot of great opportunities in the marketplace. And although what happens is the markets in itself run in cycles, very difficult to trade, and then markets get very easy. So in between very difficult to trade and markets getting easy, you need to understand, hey, I need to back off a little bit, and just because I'm not active, that doesn't mean I'm working. What you want to do is you want to set the tone and look for sectors that are rotating from one sector to another and putting money in that particular sector. That does not mean that you can't buy stocks in weak markets, but you want to buy quality stocks. So when you do have a market that's bid up for the day or next couple of days, that stock will run faster than the stock that's been really beaten down and battered. Okay. Now there is a obviously there's different reasons behind it, unless there's a high interest short stock or something like that. But that's not what we're here about. What we're talking about. So I wanted to just show you this, and pretty much when you see energy rising, basic materials rising, you see consumer staples starting to rise as well. Healthcare in this particular instance is actually taking on a chin, and utilities are actually doing quite well. And then you have banks actually getting very weak. We're actually here, to me, is telling me that we are now physically topping in the short term. Now, again, the longer term picture at this moment remains intact, and the longer term picture is still valid, okay? But remember, things do change unexpectedly, and we need to change and adapt as traders and investors. And we need to do this quickly, because what happens is fear is greater than greed. Fear happens so fast that it would just leave you behind if you're not ready for it. And that's why in this video today, I like to present and make sure that everybody understands that we need to be ready when and if the market is topping. And again, we need further evidence, but I do feel that the markets are in a topping phase here. Okay, now, so we've already pointed this out, and this is a great little chart. I found it on the internet, and again, it's a model, and it's something that, if you want to look at it, I believe the creator of this model was Sam Stovall, Stovalls. And he's got a book out there on Amazon, but I kind of looked him up a little bit. But great model. This is actually a great picture, and this is exactly what I was thinking. And I'm like, you know what? Let me present this and show this to you. So just wanted to get that out there in case you guys want to read it further about market cycles. But excellent, and this is where I think we are right now, and this is where right up here, maybe early stage of a market top, maybe somewhere in this curve. Okay, so now let's go into the charts. And usually I like to do a top-down approach, but in this segment, I just want to show you a 5-minute chart of the ES, which is the electronic, and the spiders looks the same. So in this morning, let me just roll this back real quick. Now, as you can see here, this is giving me pre-market data, okay? Now, here, as you can see, we actually had a low just before we close on Thursday, all right? And I'm just going to kind of draw this chart here just to show you where that low was. All right. Okay. And now, you could see here that we really didn't do much. We rallied. We were up about 2.5, 3 handles in the pre-market in the overnight session, Asia and Europe. Really didn't do much because everybody was waiting for the non-farm payroll numbers to come out. And what I want to show you is this, very interesting. And usually, and when I look at the pre-market data on any risk event that comes out, is you want to look at the volume. Look at this volume bar. This volume was 59,000 contracts. 59,000 on one bar. And then we had higher than usual volume, 14,000 contracts. And this is a 5-minute candle, which told me, and I was speaking to several traders at the beginning, which told me that I believe at this time that a lot of the longs have already positioned themselves to be long. Now, most traders, okay, and the majority of them, the more like the novice, an intermediate, they're not going to hold an E-mini contract over the weekend because there's additional margin that's involved. And when you see this big spike, especially on a Friday risk event, which told me that when we had this sell-off here at 9:30, we just before the market opened, we made another intraday all-time high of 1892.50, which kind of told me I was suspect of this rally. And sure enough, when we sold off and we bounced, I was okay. Well, remember, it's very difficult because what's happening is that this market is being bid up for no reason. We're fairly valued. Other than the Fed backing the market, that's the only reason why this market is up right now. There's absolutely no fundamental reason to buy stocks here because they're fairly valued, okay? Just keep that in the back of your mind. Now look at the market, making an intraday high. So we had worse than expected non-farm payroll numbers, and I mean that they weren't as great as what they were expected. So bad news is good news. So by having bad news is good news, they bid the market up, saying, okay, that now the Fed, Janet Yellen's even going to be more worried about this, and she's going to totally back the market. They rallied them. And then sure enough, they sold them, they rallied again. Now, to me, I would say, okay, you need to be careful here because they're looking to see where are they going to be buying the dip, right? And sure enough, and this is why I say risk comes fast, if you weren't quick enough to get in short, now I don't know about your trading plan, but when you're quick enough, look what happened. There was no bounce except a couple of small bear flags that literally didn't even break the 8. And this is the momentum moving average where it hugs price. And I would have loved to see something into this 20-day, which would really confirm, obviously to look to get short or add to your shorts. But when you have something tight like this, look what happened. Market just sold off all day. And look at this. More so, and I just want to show you that we've wiped out 4 days of gains in literally one afternoon, one day. And let me just bring this up to another 15 minutes. Now, and look what you see here. We have a big bearish rising wedge, and we broke it. Now, and we broke it. We took out 4 full days of gains in one session. And that's why I say risk comes really quick. So we need to prepare, and we need to defend anything that you have as far as if you're a longer-term investor. You have to be careful. Now we have volatility starting to pick up. Still cheap, but not as cheap as when risk was on here. So now you have a decision to make. Now, what we need to do first is we need to understand: are the markets absolutely topping here? Okay, and I say they are. And you can see here we have lower lows, lower highs, lower lows, lower highs, and these are little slashes I just want to show you. And then, sure enough, once you broke, and we broke this previous low, the market just really did what it had to do and just really purged itself for the day. Now, it's interesting. We caught the hourly 200-day moving average, and this here, we caught it, and then we just literally just kind of sold off. And this is the ES, but if you look at the spiders, let me show you the spiders. And if you take the data from here, let me just give you just to kind of show you. Equities, we'll get rid of the extended session, and you can see that we held the 200 period moving average on the spiders. And that's why I said, it's important to look at a little bit of everything when you're trading. So if you were looking to get short, pretty much the last 2.5 hours of the day was pretty much gone. And then we had this sell-off. And this is an hourly spiders chart now, okay? And I'm reverting back to the spiders. It is exactly the same. And if you look at here, the /ES, the future gives you a little different. But I wanted just to show you, and sure enough, the futures was much more weaker because what happened was we had a lot more buyers come in, and they really sold this market down here. Okay, so let's go look at another monthly now. So we saw that there was pretty much, if you weren't quick enough, or and again, I like confirmation when I'm looking to get short and or long. So if I don't get a trigger, or if I miss the first trigger and it doesn't give me a second trigger, I have to step away. That's just my trading plan. But that doesn't mean that we can't be prepared here. Okay, so now we have the 1272 extension. This is off the monthly chart. This is off from the recovery lows of March of 2009 to where we are now. And if you can see here, we pretty much had gains across the board. And we are early stages of April, but I just want to let you know, pretty close here to what we have. We just started, and we did have barely close on outside month reversal. Close on an outside month of gains from March. But we look at this and say that we are still close to the extension. We're pretty much that a lot of the moves tend to terminate at these extensions, 1272, and then of course the 1618, and that may be the bigger picture for now. But looking at this closely, I would suggest a revision to the mean of at least coming back down. And remember, this is a monthly chart now. If we were to even come to the 20-day moving average and flag down here at 1660, that is still bullish. There's nothing wrong with that in the longer term picture, in the monthly chart. Now, obviously, at 1660 on a daily chart, which I'll show you, there'll be some technical damage like we've had on Friday. Okay? So now let's go look at the daily chart here. Now, this daily chart, we had a 1 day down, big distribution day, as you can see here. And we did come out of that symmetrical triangle, which I indicated to you in ES. But again, we are at the 1272 extension, which also gives me clues that we may terminate here and revert back to the downside. And I do think that this is a healthy correction if we get it. Remember, 1 day does not make a trend, guys. 1 day does not make a trend. I want to specify that I am not calling that we are looking to get, we're going to be selling off anytime soon. What I'm seeing is that price action is telling me and giving us warning signs that we may be topping. And I'm sure everybody will be calling the same thing because we had the 1 day. But Friday's price action was absolutely noticeable. And I will be taking note of that. I'm saying, wow, this is definitely something that we actually reversed again, and this I believe is the fifth major reversal in the last 6 or 7 trading days, where we popped up and we made new intraday highs and we sold off, telling me there's willing and able sellers coming in at these areas. And remember, we have a lot of individuals here caught long here now. Remember that. And also, I want to specify they've been buying stocks on margin. So when you are borrowing money to buy stocks that you can't afford, the first thing that goes is the good quality stocks. So there'll be across the board liquidation on good quality stocks. Doesn't matter what it is, and then the bad stocks goes last. Bad stock meaning that in their portfolio, stocks that they don't want, they're going to get rid of. So we're going to sell first and ask questions later. And this is a big warning sign. And again, Monday we might revert back 50% of this candle, which is fine. But if we don't take the whole candle back, then there's going to be I see some further downside. And we're in notorious part of the season, seasonal tendencies that we tend to get weak right around middle of April into May, where we have the sell in May go away. Now here's the hourly chart, and as you can see here, we pretty much took out 4 trading days. Again, at the 1272 extension, we did hold it the last couple of trading days, and we marked it and we sold off again. Big distribution, again, telling me that there's able sellers and willing sellers to come in and start knocking this market lower. Okay, now let's take a look at some of the things, and I've been mentioning this to you many times, is the Japanese yen. Japanese yen, although, as you can see, one big candle, it is an engulfing candle, remind you, and there is better volume, but I want to show you the 5-minute chart. And this was another clue that the yen has actually moved higher on a 5-minute chart. And as you can see here, this is that wild price action at 8:30, and look what happened. Yen rallied and rallied and rallied and actually closed at its highs. So again, telling me that there's a problem here. We have risk trends, that we have strong signs that we don't have risk positive trends anymore, which tells me risk aversion, right? I mean, you could just see that by the yen. Let me show you bonds, the ZB. You could see that by the bonds. I'll dial it down to a 5-minute chart, and you could see here on the 5-minute chart, same thing, same picture, money flowing into bonds. That means that money's flowing out of equities and into bonds. That's not a good sign, especially when you have markets at a fair value and are fully extended. Okay, that's where we have to be cautious. Now, we could literally just revert back to the upside tomorrow and then rally to new highs again. Absolutely. But we need to pay attention as traders and investors. We need to pay attention of what's happening around us and say, wait a minute, there's a lot of warning signs here. I have to be on my toes for the next couple of trading days and or weeks, okay, for that matter. And also understand that there's going to be some great opportunities to come in the coming days and weeks. Okay, now let's look at this. We have the consumer discretionary. Take a look at what's happening when risk comes off. Discretionary, what's happening? Lower high from here. So we have bearish trends. Now we did break out of it, but now we failed and we fell back into this lower trend line here. So again, a negative sign for the bulls. Utilities, what's going on with utilities? Money flowing into those high yielding utility stocks that pay a good dividend. Another sign that markets are topping here. Utilities making new highs, actually made new all-time highs on Friday intraday. So again, another warning sign. Transports. Now, transports really, I love to see a market continue to rise in a bull market, but within reason, obviously. And this is disappointing that transports literally just failed here. This is a very bad sign that we may be moving lower, especially when you have a transport. We had a beautiful 4 or 5 day move. We made new all-time highs, and now we failed. And we failed miserably to the 20-day. Now, the transports are actually held up pretty well. That it is still above its 20-day moving average. But again, major distribution, big distribution day, and everything has gotten sold off. From all of the truckers to the railroads to the airlines, you have to be cautious here. IWM. This is really sad, and unfortunately, this is one of our secondary leaders, a good gauge of risk on, risk off. And if you could see here, what's happening? lower lows and lower highs, right? Off of this high, lower high, and not only did we make a lower high, but look at this move lower. Now we're catching this area of resistance, which is now support, and this needs to hold. If we break this low, okay, and this is the March low. If we break this March low, you're going to visit the 200-day moving average, and then of course it would be your February 5th low, and that'll be the next target. So your two downside targets are here, and if we really crash down here with additional volume, that's going to confirm that a top is in place, along, of course, with our other indices to follow. Okay, Qs, nasty day, making lower lows, lower highs. As you can see, pattern recognition, same thing, guys. High, look at the volume on this thing. Terrible price action. And this is more because we have big cap tech and we have big cap biotech actually really taking on the chin. It's heavily weighted. So this is the first one to go, and as you can see here, this really just took a dive. Just above 89.50, 89.70, it needed to take this out. It did not do so. Next stop, I believe, is going to be 84, which is this big area of support. By the time that does happen, who knows, the 200 days should be right up around it. So, again, you can see all of the important indices and the leaders starting to break down here. Okay. Lastly is the euro dollar, and I like to see where the euro dollar goes. And I'm going to show you the dollar index, but as you can see here, we have the euro dollar clinging here, holding the second last ditch support area where we have a little confluence area of support. We have two uptrend lines, and then we have this area here at 36.65 in the euro dollar. Now let's take a look at the dollar. It'll be the last chart I'm going to show you. The dollar, if the dollar starts to break higher, it's going to put additional pressure on commodity stocks, additional pressure on equities. Now we need to watch this. Now this basically was taking a cue from the non-farm payroll numbers, so they were going back and forth here. But if you look at the 5-minute chart again, we did have a little bit, look, this crazy price action, up, down, and then it just kind of settled in. But can't deny the daily chart, guys. The daily chart looks pretty constructive to the upside. We did break out of this pendant, or symmetrical triangle, if you will, and we did try to test that 200-day moving average here. Now, obviously, this would help equities to the long side if the dollar starts to sell off meaningfully. It gives us a meaningful sell-off. But at this moment, it hasn't done so. So we need to pay attention to what the dollar does, and we need to pay attention to these indices. Remember about the market cycles. It looks like that we are topping. Now, we're going to need some further evidence, and I mean evidence as far as we need to break key pivotal support areas, and we also need to be continually price needs to be making lower lows and lower highs. If that does happen this week, and we can get the next back test, then we can start selling rallies with confirmation and conviction. Okay? Until then, we need to be on our toes. Let's see what happens the next couple of days, and let's get our cue from what the market tells us to do. Have a great day. Enjoy the rest of the weekend. I'll have a full report tomorrow morning. Thank you.